the Fed definitely does have a longer game. It certainly has a longer game than the market expected. So as I mentioned, inflation is easing, is rising by a smaller amount, but there are elements that people call sticky. So the very sticky inflation is actually something the Fed measures, and that's in areas like airfares, medical services, and rent. And the issue really is that last mile of progress toward the 2% inflation goal is very hard. And recently, over the past couple of months, inflation has surprised to the upside, meaning it's come in stronger than expected. And the stickier inflation means that the Fed is going to cut rates more slowly and keep them, what the media and the market call higher for longer,
And I
essentially.
think the markets were thinking around 7 cuts at the beginning of the year.
Yeah, exactly.
Starting in March originally.
And those expectations changed very, very quickly recently because the Fed has been very clear that they want to make sure that inflation is defeated and that rates are not going to come down probably as much as the market expected. So heading in, it was 7 times that the market expected the Fed to cut, and that's fallen down to 3 times. And when we talk about a cut, we mean a quarter of a percentage point. And the problem with 7 was that assumed that a recession was going to happen or the economy would slow very significantly. And right now the consensus is for a soft landing or no landing, the economy still holds up very well. So that's why the market shifted. And to us, that sounds about right. We expect very steady, measured cuts from the Fed.